5 million self-employed Americans are about to get hit with a financial earthquake in 2026, and almost none of them see it coming. Here's the number that should scare you. The average self-employed person on an ACA marketplace plan currently pays about $200 a month for health insurance after subsidies. In 2026, that same plan jumps to $780 a month. That's not a typo. That's a 290% increase because the enhanced subsidies that have been keeping premiums affordable are expiring. And here's what nobody tells you. There are legal proven ways to slash that number, but you have to set them up before open enrollment closes. Let me break down what's happening. Back in 2021, the government expanded ACA premium subsidies. These enhanced subsidies meant that nobody paid more than 8.5% of their income for a benchmark silver plan. It didn't matter if you made $40,000 or $400,000, your premium was capped. That was great, but those enhancements were always temporary. They were scheduled to sunset. And here we are. The One Big Beautiful Bill Act passed in 2025 without extending them. So starting January 2026, we're going back to the old rules. And here's where things get interesting. Under the old rules, there's something called the subsidy cliff. Once your income goes above 400% of the federal poverty level, that's $60,240 for a single person or $124,800 for a family of four. Your subsidy doesn't gradually decrease, it drops to zero. But wait, it gets better. Okay, let's get into the real numbers because this is where being self-employed actually gives you an advantage. You just need to know how to use it. Your ACA subsidies are based on something called Modified Adjusted Gross Income, or MAGI. For most self-employed people, MAGI is basically your net business income after deductions. And here's what nobody tells you. You can legally lower your MAGI to qualify for subsidies. Every dollar you contribute to a health savings account lowers your MAGI. Every dollar you put into a solo 401k or SEP IRA lowers your MAGI. Half of your self-employment tax lowers your MAGI and your business expenses. The real ones, they lower your MAGI. Let me show you what I mean with real numbers. Say you're a freelance graphic designer. Your gross revenue is $95,000. Here's how your MAGI breaks down. Gross revenue, $95,000. Minus business expenses of $15,000, $80,000 minus half of self-employment tax of $5,650. $74,350. Minus solo 41k contribution of $23,000, $51,350. Minus HSA contribution of $4,300, $47,050. Your MAGI just went from $95,000 to $47,050. Now here's where things get interesting. At $95,000 as a single filer in 2026, you'd be above the 400% federal poverty level threshold. No subsidy, full price plan, maybe $780 a month. But at a MAGI of $47,050, you're at about 313% of the federal poverty level. That qualifies you for subsidies. They could bring your premium down to around $150 to $200 a month. Same person, same actual income, just using the tax code the way it was designed. And here's where things get interesting with the HSA. Specifically, an HSA is the only account in America with a triple tax advantage. Money goes in tax-free, it grows tax-free, and it comes out tax-free if used for qualified medical expenses. For 2026, you can contribute $4,300 for an individual or $8,550 for a family. Every dollar you put in reduces your MAGI dollar for dollar. Oh, and it gets better if you're 55 or older. You can add a $1,000 catch-up contribution on top of that. Let that sink in for a second. A family where both spouses are 55 or older could contribute $10,550 to an HSA, potentially lowering their MAGI enough to go from zero subsidy to thousands in subsidies. Now here's where things get interesting if you're married. If one spouse has a W-2 job with employer coverage and the other is self-employed, you have options. The self-employed spouse might be able to buy their own plan on the marketplace and qualify for subsidies based on just their share of the household income. This gets complicated, and the rules vary by state. But the point is, don't assume you don't qualify. Run the numbers. Let me show you what this looks like with real people. Meet Jake. He's a freelance photographer in Ohio. In 2025, he was paying $187 a month for a silver plan. Great deal. He didn't think much about it. When open enrollment for 2026 opened, he auto-renewed. Didn't look at the numbers. His new premium, $612 a month. That's a $5,100 annual increase. He found out when the charge hit his account in January. Now meet Maya. She's a self-employed marketing consultant in the same state. Same income level, about $85,000 a year. Same subsidy cliff threat. But Maya did three things differently. 1. She maxed out her solo 41k $23,000 contribution. lowered her MAGI by $23,000. 2. She opened an HSA and contributed $4,300. Another $4,300 off her MAGI. 3. She documented every legitimate business expense: home office, mileage, equipment, software, another $18,000 in deductions. Her MAGI went from $85,000 to about $39,550. That put her at roughly 263% of the federal poverty level. Jake pays $612 a month. Maya pays $143 a month. Same state, similar income. The difference: Maya understood the rules and played the game. Jake auto-renewed and got blindsided over a year. Maya saves $5,628 compared to Jake. Over 5 years, $28,140. That's a down payment on a car. Okay, enough theory. Here's what you should actually do right now. 1. Estimate your 2026 MAGI. Take your expected net business income, subtract half your self-employment tax, subtract your planned retirement contributions, and subtract your HSA contribution. That's your MAGI 2. Check where that puts you relative to 400% of the federal poverty level. For 2026, that's $60,240 for singles, $124,800 for a family of 4. If you're above it, look for legal ways to lower your MAGI 3. Max out your HSA if you have an HSA-eligible plan. That's $4,300 for individuals, $8,550 for families, triple tax advantage, and it lowers your MAGI. 4. Open a solo 41K or SEP IRA before December 31st. A solo 41K lets you contribute up to $23,000 as an employee, plus up to 20% of net self-employment income as profit sharing. 5. Do not auto-renew your health plan. Log into the marketplace, update your income estimate with your projected MAGI, not your gross revenue, and compare plans. The difference can be thousands of dollars. This is general educational information, not financial advice. Everyone's tax situation is different. Talk to a CPA or licensed insurance agent before making decisions about your specific situation. If this saved you money or just made you feel less confused about health insurance, and that's what we're here for, hit subscribe. We translate the fine print so you don't get screwed. And seriously, don't auto-renew.